All right, guys, let's get down to it and try to make you some money. Now, all week and late last week, I've been trying to find these stocks that have been somewhat beaten down. I don't want to chase. And, you know, what I like is Movado. And I'll tell you, one of the things I like about Movado, I love the story of the guy who started it. He born in Cuba. When he was a young kid, someone asked if he could find a clock. He went and he got the clock. He sold it. Didn't make any money. The guy wanted 2 more clocks. He says, "You mind if I make a profit?" He says, "Sure, why not?" He made $1. So the capitalist seed was born inside of him. And then Castro took over. And Castro took him in. They beat him up for about 8 hours or so. Said, "You're going to join the regime?" He said, "No." Went home. Went to the airport. I hate to make the story long, but it's a beautiful story. And he was trying to leave the country, and he saw his best friend. His best friend was like already an officer in Castro's military, and he let him go. He came to America and started Movado. That's the greatness of this country now. You can see where the stock is under a lot of pressure, so I am trying to pick a bottom. It's at the bottom of the chart, but I think it's oversold down here. There's some questions about the higher Swiss franc. I think it might make some of their competitors' products even more expensive. Having said that, I know it's a higher risk than normal. For the most part, I don't mind sometimes giving up 2 points to the upside. But in this particular case, if someone wants to build a position here, I think Movado might be a stock to buy and hold 6 months to a year.
I can see your argument for the Swiss franc because obviously they have much more exposure. But 5 of the 10 brands do use Swiss movement, so they do have some exposure to franc. And when you look at the bottom line, Charles, about $2.07 this year, dropping to $1.84 next year. So you're not seeing growth. Revenue growth only 1.7% last year. I think there could be more downside, and Apple announced after a bell the smartwatch is coming out. That might have a little bit of exposure to that as well.
But you think, honestly, someone's going to say, okay, I want a nice Movado, I'll take this.
UBS said 10% of people out there that will buy wristwatches are now going to smartwatches. Not a big number, but some people
that'd be like Swatch or Fossil or something.
And it could be baked in. Maybe that's why the numbers ended up being bad in November. I think there's affordable luxury here, and it's very similar to whether it's Restoration Hardware or Coach or Tiffany, and we're going to see it come back.
I know you don't like to focus on this, but I'm telling you, for your pick, they're going to benefit from their buyback plan, which they have just doubled. The company has some cash, about $100 million. They want to put it to work. So while the watches themselves maybe don't wow me, the fact is I think the company believes in their products, and at a minimum, they're going to be buying back some stock. I think we might have found a near-term low, or watch the stock at least from that standpoint.
Let's bring in a retail guru.
I think that's the only thing that it has going for it, to be honest. Down 17% since December, and I don't think the aspirational customer is there. I really don't. I think there's going to be more downside to it.
Under other names like Juicy, Hugo Boss.
Sure.
I mean, so there's some revenue there.
Again, you just named a couple brands that there is no demand for.
All right, guys. So we're going to put everyone down for a no and Hilary as a maybe. All right.